Welcome back to the STAKK YouTube channel. Thank you for clicking on this video. It's your boy Brazen.
And the below.
In this video, we're going to be talking to you about some indicators which we use to inform our entry points, either for entering into a stock or a cryptocurrency for the first time or for dollar cost averaging. Some of those indicators are moving averages and exponential moving averages, Fibonacci retracements, and using previous support and resistance levels as well.
Yes, so we are going to be looking quickly into the moving averages that we're using here. In this video, we're looking at the 20, 50, 100, and the 200 moving, simple moving, exponential moving average. Right. Not the simple moving averages. And we are also going to be looking at using the Fibonacci retracement lines. The numbers that we're using for the retracement lines are the 0, 0.236, 0.382, 0.5, and 0.618, 0.718, and 1. So quickly, just to run through this, we're looking at this chart right now. We're looking at the Cardano charts, and we're currently looking at the price points below the 20 and the 50-day moving average. The 20 is the yellow, the 50-day moving average is the orange. This is a wonderful time to buy a project or a stock or a cryptocurrency that you believe in, especially when the prices are below those moving averages in the meantime. It's even way better if the prices are below the 200 moving averages or the 200 or the 100-day moving average, which you have here. The blue is the 100 and the red is the 200 moving average. But because we know this is Cardano, the price might never get below the 200 moving average. It might come below the 100, which would be a great, even a much better opportunity for you to buy. Right, so we're looking at this now. The price, the 20-day is moving below the 50-day moving average, and the price is currently below that. So this would be a good time for you to reach down and buy more of, to go ahead and buy more of the coin. We call it coins, not the stocks in this case.
Yeah, coin or stock, whatever it might be.
Yeah, whatever it might be. And a big buy opportunity or knowing when to even enter, a better opportunity is to see when the price point is crossing the 20-day moving average is crossing the 50-day moving average upwards. This would be a much more of a bullish opportunity for you to get in. This is when you want to buy something that is about to move upwards. So that's a great opportunity for you to buy. We also have here the Fibonacci extensions, which, by the way, the tool that we're using here is called TradingView. You have when you sign up and you get the free version, you have an opportunity to select 3 indicators. Yep. I would recommend that you get the Fibonacci retracement. You put on the moving averages and maybe turn on the TTM squeeze or the MACD to figure out when to enter. So right now, the signs are showing that Cardano is still moving downwards, but it's kind of building a base here, right? But the price is, the price is below the 20 and 50-day moving average, and the 20-day is facing downwards, which is also a good buy time. And the price is currently below the 0.236. Which means that it would probably test the 0, which it has done once. If it tests it again, that would be the second bottom, and 2 bottoms usually equals an upward trend. So that's just another thing that we've learned over time. So right now it's a really good time. Another thing that Shay just mentioned earlier was looking backwards, right? Looking at previous support. Support and resistance level. And this is all visual, this is all psychological, this is all visual. If you just look backwards and see the last time the price faced a major resistance and fell backwards, or the last time it reached this point and it either moved upwards. So based on this, without using a retracement, we can say somewhere around $2.11, $2.10, or somewhere around that range of $1.90. It's a major support level, somewhere around there. So this range, somewhere around this range, is a major support level, and it's going to continue to bounce off that line. And if it fails that line, it's probably going to go down to 0. Now, if it fails 0, something serious is going on with Cardano. We don't expect to see any of that with Cardano specifically, but yeah, these are good ways for you to select entry points.
Absolutely, that makes sense. I would also add on that one thing you also want to think about is that when you're buying and selling stocks or cryptocurrency, you also have to think about the fact that it's not just you, right? You're also going against other people who are doing the same. You also have to think about when are people going to be wanting to collect profits, right?
Mm-hmm.
And that's a great time, because if you're buying something at the top, well, it's very likely that people will be collecting profits at the top. Oh, look at that market close. How did your portfolio perform today, sir? Right. So if you're buying something at the very top, right, and it's very likely that other people who've been in it will be looking to collect profits at the top. This means you may likely be sitting there in the negative for a while, and that's also where the Fibonacci retracement as well is kind of good for something like that. Other than that, you also have your RSI, and this kind of ranges. Why does this tool not ever work for me, dude? Anyway, so when you're below 50, when you're below that 50 value there, generally it means that that security or cryptocurrency is not overbought, right? That's generally a good time to be buying into it. And when this turns around and is crossing above that 70 value there, then it's generally overbought. So you don't want to be buying into it at that time. At this point in time, Cardano is the one which we're using as an example here. We can see that it's not overbought, and it's definitely a decent time to be buying into it. And as Kenny also explained, looking at the moving averages sitting below that 50-day EMA, I would not say it's a horrible time to be getting into it as well. So our limit orders are somewhere a little bit below down there, right? And this applies to almost anything. You can pull up any chart and go through it, and you see that the same things are really playing out there. Anything else to add, sir?
Yeah, you mentioned something earlier, not buying at the top. This is where your Fibonacci retracements come to play, right?
Yeah.
So when you're trying to either exit, you want to see where is the major resistance level. That one level, as you can see, it failed. That's a major resistance level. If it opens a candle above that and doesn't fail, whoo, get ready for some crazy movement upwards.
Some strong action.
Which yeah,
Exactly.
but if it touches it and starts shaking backwards, big chance it's gonna fall back to the lower levels, which you can see here. It has done that, and it has also touched the zero, and it has been strong enough to not fall below the zero. It's holding, which means this is really good news. It's gonna come back up.
Absolutely. Well, that is it for this video. Please let us know if you'd like us to take a deeper dive into this. We will definitely be glad to. Leave your comments down below, and thank you for watching. Until next time, praise and out.
Double O out.